It was interesting that when we were rushing to conclude, okay, implications of the conflict, in a sense, I'm not downplaying it. It's massive and it's got huge implications. And actually, at a regional level, it's a huge thing and a huge reality. But actually, at a global scale, it's just another shock. And we've had so many. I think it's a continuation of, it's a prolonging of this energy crisis, inflation, sticky inflation, slow adjustment in interest rates. I think we're in a world, and it's actually interesting from the family office survey that we did in this year's report. Some of the comments we got from families about how they're positioning themselves for the real estate market over the next few years is this expectation that you don't expect yield compression, don't expect the market to save you or rates to save you. It won't happen. So actually, you've got to look forget cyclical trends. You've got to look for structural growth because. And there was a great quote, which I hope I can remember, which was basically, think about real estate or invest in real estate where that demand is inevitable. That was the quote we got from one of the families. So pointing to those sectors where you just know that irrespective of what's happening in the economy in the world, you know that there will be demand for. So I don't know, in lots of locations, housing affordability is underpinning self-storage, that thing. So the AI boom continues to feed into data centers and energy supplies. But there's just those areas where there is a structural underpinning which will continue. But in the wider market, it's going to be tougher because you're not going to get that yield compression over the next few years unless we get a break from this inflation cycle.